Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracey, and this week I'm going solo to talk about stocks that are beating the S&P 500, and that is here in 2024. Now, if you haven't been paying attention, the S&P 500 has started off this year very hot. It's now up about 21% here in October of 2024. That's year to date. And that is the hottest start to the year of this century. And yes, we're only now 24 years into this century, but that's a lot of years that it could have been hotter than this, but wasn't. So this is a high bar to have, up 21%, and you're trying to find stocks that are doing better than that in any given year. To have a return on your portfolio of 21% would be pretty extraordinary. If you do that for a couple of years, you're doubling your money. But to pick stocks that are doing even better than the overall index is, I thought, going to be a little more difficult to do. But just looking around and preparing for this podcast, I've determined maybe it's not so tough after all. I was tweeting out about this subject the other day, and someone tweeted back at me because I was arguing for the prior year, not even year to date. So the S&P 500's up about 32% over the last year. Also an extraordinary number because remember last year we had a low there in October of 2023, and now we've been on the rally ever since. So it's been, if you did buy at those lows, you're doing quite well. How could you beat 32%? That's what I was tweeting out. And someone tweeted at me, oh, I've done 112% in the last year. And so that's where my, idea for this podcast came about, because I was wondering how difficult is it to find stocks that are outperforming the 20% year to date level? And, can I just pick a few off the top of my head and outperform, as some people on Twitter, or X as it's now called, are insinuating that you can? Well, I just picked a few stocks off the top of my head for this podcast to test this theory and kind of see. And yes, I did know that these stocks have been on a hot streak, have been hitting new 52-week or all-time highs this year, but 20% is still a high level, a high benchmark to beat just year to date. We're only in October. So what are these stocks? Well, the first one has to be the one that everybody talks about, that we all either own somehow in the S&P 500 or as an individual holding now, and that is NVIDIA. So the word is kind of out there among money managers, the pros, that in order to beat the S&P 500, you have to own NVIDIA. Now, that would be large cap growth managers. If you were a mid cap growth manager, you can't own NVIDIA. It's out of your scope. Or maybe you're a value manager, you can't own NVIDIA either. So those who can, the way to outperform is to own NVIDIA, because as we all know, it's one of the hottest stocks in the S&P 500 for this year. So let's take a look at its chart, because, it'll become obvious right when we look at it that yes, you are outperforming the S&P 500 year to date. So looking at the chart, if you're watching on the video, NVIDIA is up 174% for those listening on audio and can't actually see it, and easily outperforming the S&P 500, which I put on the chart as the Vanguard S&P 500 ETF, which is ticker VOO. It's just one of my favorites, and I just kind of use it to represent the S&P 500, and it's easy to use on these charts. You can use other S&P 500 ETFs or the S&P 500 if you wanted to, but I like seeing what VOO is doing because it's so widely held. So it makes it look kind of paltry here, right? Of course, you're going to be that guy on Twitter who told me he's at 112%, because even if you have a bunch that are underperforming, if you have one NVIDIA that's outperforming on this magnitude, it's going to help elevate the rest of your portfolio, as long as you don't own, say, 100 stocks. Then you got other issues. But in a, kind of consolidated, smaller 10 to 20 position portfolio, having an NVIDIA will help your overall returns, obviously. So NVIDIA is outperforming, but you might be surprised to know that over the last 3 months, and I'm switching the chart now, NVIDIA and the S&P 500 are basically almost neck and neck, as the stock is just kind of traded in this narrow trading range. You had a couple of great chances to buy on big sell-offs, one or two really in August and another one in September. And now it's back up kind of testing those highs. But the VOO is up 2.85% in the last 3 months, and NVIDIA is up only 2.45. So it's actually underperforming over the last 3 months. But if you were a trader and you got in at the lower level, you obviously have a better return. And for those who are longer term investors, if you want to call 10 months or year to date longer term, then obviously you're outperforming. But it's always good to look at, kind of different time periods, because it can be a little misleading that a lot of this was front loaded in the beginning of the year and not so much the last 3 months. So NVIDIA is taking kind of a timeout as it's consolidating near its all-time highs here. So we'll be watching that one to see, if we get a further breakout here. But what about some other stocks? Like I said, everyone knows about NVIDIA. We know it's one of the best performers. But what if at the beginning of the year you had taken a chance on some other areas outside of the AI? And so I did want to show some of those. And one of the ones that, everybody likes and owns, and it's got like the cult-like following like NVIDIA, is Costco. So I've just put that up on the chart. And again, compared to NVIDIA, it looks like it's gone nowhere. But Costco's up 35, almost 36% year to date now. And that, again, is outperforming the VOO, which is at about 21%. So that's a great return, especially for a stock that's been rallying the last several years, in addition to what's going on this year. So if you had been a long-term shareholder of Costco, you're still feeling the vibe here in 2024, and it's making it seem easy to beat the S&P 500 just by owning this retail juggernaut. So Costco, ticker COST. I'm not going to say it's cheap, because it's not. It's trading at 49 times forward earnings, but everybody believes it's the one retailer you've got to be in and you've got to own. We're heading into the holiday season, so this is its big time. Again, that's Costco, COST. But I wanted to look again in another industry beyond some of these hot retailers, because you can find those. What about a hot restaurant name? There's several of them. I've talked about Wingstop in the past, but this time I want to talk about a riskier play, Cava Group. So I just put that up on the chart. You can see it in kind of that dark purple line, and it's up 223% year to date now. This is a recent IPO. This is the Mediterranean fast casual, kind of like the Chipotle of Mediterranean food. And it's expanding pretty rapidly across the United States now. We only have one store, I believe, still in Chicago, but I'm sure more will be rolling out here. So if you're in the South and the Southeast, you're more familiar with Cava, because there's a lot more of them in those locations. But this is a hot restaurant stock because people are thinking it's like Chipotle's early years, and it's got the same store sales growth going on. So this one even beating NVIDIA year to date, and it it definitely puts everything else to shame. If you had taken a chance on it to start the year, then yeah, you are definitely beating the S&P 500. Just out of curiosity, looking at its 3-month chart, it looks more bullish than anything else we have on here. And it is. So over the last 3 months, it's up another 37%. And then we have NVIDIA still on here, up just 2.5. Costco's only up 0.17, not even a percent for Costco. So Costco and NVIDIA both underperforming on the 3-month chart, but not Cava. You are still doing laps around the S&P 500 with this one. That ticker is just Cava, CAVA. Another stock that has been in the news all year, but it really doesn't get any love. And that's why I kind of like it. It is being ignored, is the weight loss giant. I'm just going to call it that now. Eli Lilly, ticker LLY. And this stock has been outperforming because of the big drive in the weight loss. But we're looking at the year to date, and Eli Lilly now up 54% year to date. But a lot of people think that's kind of boring, even though it's more than double what the S&P 500 has done year to date. I don't know why Eli Lilly doesn't get the love. I feel like some people think that the weight loss drugs maybe are just a fad. They're not going to stick around, and we're going to see earnings decline, considerably perhaps, but I'm not buying it. The drugs have just been rolled out and got approval in China now. So Lilly's able to get its drug in there along with Novo Nordisk, also got approval. But you can see again on the 3-month chart, Eli Lilly's down 1.3%. So other than Cava, all the other three that are outperforming for the year to date, are underperforming over the last 3 months. This tells you, right, like how difficult it is to actually outperform the S&P 500, even with these red hot stocks. Sometimes they have like the huge surge and then they don't go anywhere for a considerable period, but still you would be outperforming for the year. So that's Eli Lilly not getting any love over the last 3 months, ticker LLY. And then I wanted to switch over to a different industry. All of these are in different industries. They're not all AI. They're not even tech. We only have one tech name on here. And so that's another thing to keep in mind. There are many ways you can beat the S&P 500. It's not just about technology. So look beyond and you'll find some really great companies that are doing some really innovative things. And the street is noticing that's why the shares are up, but you can diversify your portfolio a bit away from just the AI play and still have this good performance. So another one of those that would diversify you away is on the retail side. The home builders, they've been hot all year. Toll Brothers is the one I picked. I own it in the Zacks Value Investor portfolio. We've owned it a little over a year now. And even when we bought it in 2023, the summer of 2023, I felt like, hey, maybe we're a little late on this, but we're getting in because the stock is still cheap. And it was hitting new highs or something when we bought in over a year ago. And now year to date, it's still up another 50.67%, just a little bit under Eli Lilly there in the red line. So that's pretty impressive. Again, just because NVIDIA and Cava's outperformance, it makes it seem like kind of paltry, but more than double what the S&P 500 is doing year to date. The stock has gotten a little more expensive after the run, and it is near or at all-time highs, but still trading around 10 times forward earnings, which is still cheap on a PE basis, just not as cheap as the 7 or 8 times of a year ago. And now the Fed's cutting rates should help the home builders. But Toll Brothers on the luxury home builder side, I like that area. So that's why I chose this one. Let's see what it looks like over the 3-month. Toll Brothers, wow. Well, it's right up there, a little bit better than Cava on the 3-month chart up 38% over the 3 months. So just goes to tell you, even though you're not really hearing that much about the home builders, and all we are hearing is that housing is struggling, housing sales are down, then you still have home builder stocks surging to new record highs here. So that's Toll Brothers, ticker TOL. And then I wanted to wrap it up with another name I just picked out because I know it's been in the news. It's owned by some of Zacks' various newsletter portfolios, including alternative energy portfolio. And it is Constellation Energy, not the wine and spirits company, but the energy company. They're one of the largest suppliers of nuclear energy in the United States, publicly traded. And this stock got a big boost in September of this year. It had already been up for the year, but got a big boost after Microsoft entered into a deal to reactivate 3 Mile Island for its nuclear energy. And so Constellation Energy, ticker C as in Charles, E as in Edward, G as in George, CEG, is now up year to date 141%. Let's see how much of that is in the last month. 60%. It's up 60% in the last month off of that big Microsoft news. Over the 3 months, that would be interesting. Still up 28% on the 3 months because of the last month, the big surge. But prior to that, it was kind of moving in line with a lot of these others that was just kind of treading water here, waiting for a catalyst. And then that Microsoft news was really the news that everybody had. Oh, I need to get in here. So that isn't anywhere close to being a tech company. It is a utility, but red hot and, ranking up there with among the top 3 that are on this chart right here of various industries. So these are just random stocks I just picked out. We could pick out others that are not beating the S&P 500. And I think you might be surprised at what some of those are. Let's take a look at even just Microsoft, because to look at the Mag 7s would seem, that would seem common. Like, of course, these Mag 7s have to be beating it. But look at Microsoft. I just put it on the chart. It's at the very bottom in the cherry red color. And it's up 11.3% year to date. Now, is that terrible? No, but you're not beating the S&P 500 up 21%. But you would have thought a company like Microsoft, also in the AI play, it's got that investment in open AI, and it's got a bunch of other things going on. You would think it would be doing at least as well as the S&P 500, if not better, but it's not. So this goes to my theory that it's a lot harder to beat the S&P 500 than you think. But these other ones that I just pulled out of, the air are all beating it. So this year is extraordinary. There's a lot of big winners in areas that are not just in one industry. This isn't just a tech rally or even a Mag 7 rally. As Microsoft isn't beating the S&P 500, Tesla's actually underperforming considerably and was in the negative recently for the year. So we know several stocks on the Mag 7 are not outperforming. But NVIDIA is, and that's the one a lot of people focus on. We stick with our winners always. And a lot of people are sticking with all of these other names that I listed here, as well as Microsoft. I don't know too many people abandoning that. I own Microsoft in my own personal portfolio and have since I think about 2018. So a lot of us are long-term shareholders in many of these stocks, but not maybe some of the newbie names on here like Cava, Constellation Energy. You probably aren't in Eli Lilly because of the underperformance of the drug stocks over the last 2 decades. And you probably don't own the home builders either. Or maybe you trade in and out of those. But these are some names beating the S&P 500 here in 2024. There's nothing real tricky about most of these, except maybe Constellation Energy might be one you've not heard of. But the rest have been in the news, have been talked about, and you don't have to be a genius. As our chief equity strategist, John Blank, often says, don't be a genius. Go with what's working. These are great companies with great earnings outlooks. Tune into their earnings conference calls this quarter, they're coming up soon, to see what's going on, what 2025 is going to look like. Can it continue with this performance? It's going to be hard, but we'll see. And we'll see with the S&P 500 too. Nothing wrong with owning the VOO and its 21% return here in 2024. Again, it's quite extraordinary. I'll be tracking these stocks and many others as we go along here into the end of the year. But for now, yes, these are a bunch of stocks beating the S&P 500 in 2024. Be invested. And as always, you want to keep following the podcast here because you never know what I'll be talking about or who I'll have on. We even have outside guests showing up now on the podcast. And I'll be having some of my colleagues on in the next couple of weeks because, believe it or not, we are heading towards the end of the year. And you know what that means? We're going to have predictions. We're going to have outlooks. We're going to have the hottest stocks of the year and ones we think might be the hottest for next year. This podcast might have given you a little bit of heads up on some of the hot stocks for this year, but we'll see if they can hold these levels into the end of the year. Still plenty of time, but be sure to get us. Subscribe to these podcasts. Get the video podcasts on YouTube. You can always go to Zacks.com/YouTube to get to our channel and also get us just on the audio. You can get us on Spotify. We're on SoundCloud. We are on Apple, of course. I know most of you listening there. We're on Amazon Music. We're on just about anywhere you can get the podcasts, but be sure to get us somewhere, and I'll see you again next week with some more stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All